Hello guys, Lucas here. Today I want to talk about a certain topic that has to do with inflation, and the best person to ask ourselves, what inflation actually is and why it hurts ourselves is basically Michael Saylor. And yeah, he has made a lot of statements about inflation and why you especially should not just save money anymore in today's economy. And here I have a little clip that I want to show you and react to some stuff. Don't worry, I won't show you everything, not the whole 20 minutes, but I guess you will get a lot of value out of that because it basically shows the value of like investing in assets that actually increase more in value than inflation itself.
Assets can't be inflated.
What's an asset?
A house, a share of Apple stock, a bond, a Bitcoin is an asset, or a Picasso painting. So,
Not a consumable good. Not not an apple that you can eat.
right. If I throw away an asset, then I'm not on the hook to track the inflation rate for it. So what happens if I change the policy such that, let's take the classic example.
What you gotta know here is basically an asset is an income producing asset. That's how you call it. Like real estate and stocks, whatever you want to pick. Like usually people mess up that stuff and think, like the house that you live in is still an asset. But as long as it takes money out of your pocket, then it's not an asset anymore. And if you now think, this guy here, talks a lot of rubbish, and where does he know that from? Like, it's quite simple. Just buy Rich Dad Poor Dad, and he will basically teach you exactly what an asset is. And Michael Saylor in this video just specifies which asset is actually the best or is actually good in today's economy, because everything changes, not everything works all the time. And Michael Saylor just gives us his opinion, and I think he does that in a very articulate way, and that he actually knows what he is talking about because he has done it, walked the path, and talks from his own experience.
$1 million bond at a 5% interest rate gives you $50,000 a year in risk-free income. The cost of Social Security went from $1 million to $10 million. So if you wanted to work your entire life, save money, and then retire risk-free and live happily ever after on a $50,000 salary, living on a beach in Mexico, wherever you wanted to go, you had hyperinflation. The cost of your aspiration increased by a factor of 10 over the course of some amount of time. In fact, in that case, that was like over the course of about 12 years, right? As the inflation rate ground down, the asset traded up. But the conventional view is, oh, that's not a problem because it's good that it's good that the bond is highly priced because we own the bond. Or what's the problem with the inflation rate in housing being 19%? It's an awful problem for a 22-year-old that's starting their first job, that's saving money to buy a house. But it would be characterized as a benefit to society by a conventional economist who would say, well, housing asset values are higher because of interest rate fluctuation, and now the economy's got more wealth.
So that's a really important statement that he has just made right now, and we are already at the end of this clip. Like, what he basically says is, like, when you just have an income and you don't invest that in something that produces somehow a bigger return than inflation, then you are basically screwed because your income, the purchasing power of that basically goes down, and like all the assets tend to go up because all the money flows in them. Like, if you think that when you have helicopter money that this does just go to the poor people, that's actually kind of wrong, because if you print that much money, the money has to go somewhere. And where does the money go? It goes where the value is provided. And who provides the most value? Like companies like Apple, Amazon, Facebook, even though we don't really like that, they provide a lot of value because we spend a lot of time on the sites and purchase a lot of goods there. And that's actually the reason why, yeah, their value increased during the pandemic and stuff, because yeah, the money just goes where the value is. And Amazon, Facebook, Apple, all these companies, they provide a lot of value, and then yeah, the companies become more valuable. That's really important to know. And like just saving money, that's not like really the way to go, because if you put like $10,000 away or $1,000 away, then and you have 7% inflation, like in a year, that your money is not worth as much as it was before. That's kind of ridiculous. Like like if you have $1,000 and wait a year and you have 7% inflation, then yeah, your money is only worth like $930 then. But if you can just add the zero with that, with other numbers, and if you then accumulate all this inflation over years, your purchasing power really goes bad. That's not a lot of fun. And yeah, basically you should try to invest in assets that outperform inflation. That's basically what Michael Saylor is saying here. Obviously, he will promote Bitcoin. That's just the asset of his choice. You can do whatever you want. But I just think it's an interesting discussion to have. And I hope you liked that video. Put your thoughts down in the comments. And if you like this format, please tell that also. Leave a like, and we will see us in the next videos. Bye, guys.